Hey folks, hope you all are doing well. I am Karan Bandal from Econosite, your weekly wrap on economic news from India and around the world. So let's get started with South America. Argentina spiraling inflation. We often talk about the inflation problem in the US and Europe, where in 2022 we saw inflation hit a 40-year high of around 10 to 11%. But wait till you see Argentina's inflation numbers. Argentine savers are struggling to keep pace with runaway inflation. Workers' budgets are under stress as costs outstrip salaries. The South American country, which has battled spiraling prices for years, saw monthly inflation speed up to 6% in January. Let me say that again, not annual inflation at 6%, monthly inflation at 6%. Annual inflation figure hit 98.8%. This is the highest inflation print seen in Argentina since the hyperinflation in the 1990s. The country ended 2022 with annual inflation at 95%. Since 2017, Argentina has struggled to keep prices under control. Quite often in the last 6 years, you can see Argentina's monthly inflation crossed 6%. That translates to a regular annual inflation of around 72%. This rampant and chronic inflation has forced the central bank to hike interest rate to an eye-popping 75%. You compare this with the policy rates in other parts of the world which are managed relatively well, and right after this we are going to talk about it. It is clear Argentina has an issue with its currency management. Now let's talk about the central policy rates in rich and emerging economies. A sharp rate hike cycle is underway with central banks' policy rates or interest rates among the major economies around the world. We are all aware of the inflation crisis that has plagued the world post-COVID pandemic, and to battle this inflation problem from US, Europe to Asia, all the major economies are on a rate hike spree. China is an exception to this. People's Bank of China is actually cutting interest rates, and even then, China's one-year lending rate sits at 3.65%. By mid to late 2023, this is where we expect policy rates to be. The Reserve Bank of New Zealand at 5.25%, Bank of Korea at 3.5%, US Fed at 5.5%, European Central Bank at 3.75%, and Reserve Bank of India at 6.5% for now. It may go up to 7%. These levels are historically high since the aftermath of great financial crisis of 2007 to 09. In other words, currency or capital is getting expensive and will remain so for the foreseeable future. How is this relevant to you and me or the world around us? Well, let's take a look. The world's expensive interest bill. Economists picked a sample of 58 rich and emerging countries to analyze effects of recent interest rate hikes on individuals, companies, and governments. This sample is significant since these 58 economies account for more than 90% of the global GDP. Let's go back to the time before central bank started hiking policy rates. In the first quarter of 2021, policy rates in this sample of 58 economies stood at an average of 2.6%. By the final quarter of 2022, this figure had reached 7.1%, a massive 450 basis points hike. During the same time, total debt in these countries went from $255 trillion or 320% of their combined GDP to $300 trillion or 345% of their combined GDP. This also highlights what a catastrophe COVID pandemic was. It took massive central spending around the world in a short amount of time just to prevent the world economy from plunging into a depression. So debt ballooned and now interest rates have skyrocketed. Naturally, annual interest bills for firms, households and governments across these 58 countries are going up. Interest payments went up from $10.4 trillion to $13 trillion. Now, there are certain assumptions that economists make here which you can read about in the description, but what we need to understand is that as the cost of capital gets expensive, households, companies and governments will end up paying more in interest payments. Even a 25 basis points increase from here at such a high level of debt will mean an exponential increase in the interest payment when compared to the income. For individuals like you and I, everything from car loan, variable home loan or mortgage to credit card interest has gone up. So if you can, stay away from debt. In the business world, we can look at the ratio of debt to gross operating profit to analyze effects of these rate hikes. Lower the ratio, the better, since it indicates higher profit and lower debt. You can see India scores pretty well thanks to relatively low debt to income ratio of 2.4, which also means that even if rates go up from here, Indian companies should be able to absorb higher interest payments better than their peers from the other countries. Let's end with a story from India. Vedanta-Foxconn joint venture in India for semiconductor manufacturing. If you recall, back in September of 2022, India's Vedanta Group and Taiwan-based Foxconn announced a joint venture to set up a semiconductor manufacturing facility in India. At the time, they had signed a memorandum of understanding with the Gujarat government to invest roughly $18 billion to set up the plant in the state. They did not disclose the exact location of the facility then, but now it is confirmed that the joint venture has selected Dholera Special Investment Region for setting up their semiconductor and display manufacturing unit. In India, we all have heard about Dholera. It is the first planned greenfield smart city of India, and it is expected that this city will offer the best-in-class infrastructure to the businesses operating in it as well as to its residents. Now, this joint venture is being offered generous incentives as part of Gujarat Semiconductor Policy 2022 to 27. The policy was announced by the state government in July of 2022. As part of this scheme, Vedanta-Foxconn joint venture and any other eligible projects will get 75% subsidy on the purchase of the first 200 acres of land for setting up manufacturing units. They will be provided with good quality water at 12 rupees per cubic meter for the first 5 years, and there are stamp duty concessions as well. Gujarat is upping its game to attract advanced manufacturing units to the state. Other states of India might want to take note of this. So, cost of capital, cost of currency will be the key theme this year, or as long as inflation remains elevated in the Western world. Mismanaged economies have started to buckle under the pressure of high cost of capital. If you are carrying debt, car loan, variable home loan, credit card debt, it is never a bad time to deleverage or reduce exposure to debt, but now you need to focus on that. In the business world, Indian companies seem better positioned to absorb high interest payments. And maybe that's why we are seeing so many positive developments coming out of India these days. I hope you enjoyed this week's wrap. I'll speak with you again next week. Until then, take care.